Hello, friends. Welcome back to YouTube. And I'm starting this week, a weekly strategy discussion for the next coming week on how the markets would shape up, what are the factors which could affect the markets, how to view, the major charts. And there are two important observations which I thought I'll bring it to your notice, and something which is very very interesting. So I think I've covered in into very variety of aspects of trying to determine how the global markets are shaping up, and then the effect of this reading or observation on the US markets, and especially on Dow Jones, on our markets as well. So let's start with this interesting bit of discussion today on the strategy for the coming week. uh, this is the charts for Dow Jones. As you can see, that this is the charts which pans over the last 10 11 months from September October 2019. You can see clearly that how the Dow Jones was forming a pattern of uptrend over here. There was a sharp correction which started in the month of February 2020. And then what happened post February 2020 was just a breathtaking rally. Now we all know, we've all seen and discussed. Now there are two important trend characteristics which is notable over here. First and foremost is when you look at this rally over here, look at the two broad channel patterns over here. This is the black resistance trend line for the Dow Jones. And this is the black support trend line for the Dow Jones. Now from those bottoms, Feb 23rd, March bottoms of March and bottoms of 18,500-ish on the Dow Jones, we've seen vicious rally, one of the most vertical kind of a rally we've seen for Dow Jones in the span of, I think, 4 or 5 months. Now you can attribute that the reason why this is called as a vertical rally, almost like a strong V shape or a vertical rally, is you can look at the slope of this black colored channel pattern. The slope of this channel pattern is very steep. Now that's why we say that it's an intense rally. It's like a V-shaped recovery or a V-shaped rally. What happens at this point of time? This is the most important point over here now. Now after this, there is the tempo of the rally drops down significantly. So after hitting this second resistance point, the tempo of the rally, I'm using my words, the tempo of the rally drops down significantly. Now we don't see a V-shaped recovery, but the pace of the rally, the slope of the uptrend reduces gradually. As you can see from here, from this point, which I call it as a fulcrum point, it's a very important point for the US major. Something which I believe all technical analysts and all of you guys who are keeping an eye on what happens across the globe and how to view the trends for the global markets, this is a very important point. Now I'll tell you a few reasons in the next few slides as well, that why this is important as a behavioral characteristic as well. Now, as you can see, the moment the Dow Jones starts to or hits this point, there is a change in the tempo of the rally. So after a ferocious or a V-shaped recovery or an uptrend, the rally now gets into a gradual. So you can see the change in slope. So look at the black lines, the slope of the black lines, and then try and compare the slope of this brown line. There's a significant difference of angle or the slope of these trend line, which means from the month of June, trading became a bit difficult. From an easy V-shaped recovery, we now went into a gradual uptrend, decreasing the tempo of the rally. I call it as a fulcrum point because now the Dow Jones is trying to test back this brown support trend line. This, for one, I believe, is a very important litmus test for Dow Jones. Now, fortunately, we saw the index bouncing back in the second half of the previous week, I think Thursday and Friday. Friday particularly, we saw a very good bounce shaping up in the Dow Jones, and that's why I believe that there could be a possibility that this trend line, can probably get supported for some more days, at least for the next 2 to 3 trading sessions. But if this trend line gets breached, so I'm sensing that the Dow Jones rallies over here, comes back to this fulcrum trend line, fulcrum point trend line. The fulcrum point is this point, which in normal layman terms you can call it as a pivot point as well, where the Dow generally swings from the pivot point or the point of fulcrum. Now this point becomes a very important and a crucial resistance for Dow Jones. Now if the Dow passes this litmus test and manages to surpass this, then we can see a complete change of behavior for Dow. But if it doesn't, if it fails to break this trend line on a sustainable basis, then there could be a retest of this brown trend line. Now the second retest of the brown trend line or the support trend line is going to be extremely important, because if we see a break of this, then according to the fulcrum point, we've already seen two change in the degrees. First was the increasing slope, the slope got tempered, and now if we see a break of this brown support trend line, you can see a further drop in the slope of the trend line. So from the black line we shifted to the brown line. From brown line, it's possible that we can start trading in this yellow or the orangish line band. So this could be the next leg of band where the Dow Jones can start to trade. And if that happens, you can see that the lower end of the curve is somewhere closer to 25,000 on the US major index. So which is why this fulcrum point trend line is extremely important. Let's also see the next slide where I discussed this on the previous YouTube video as well. You guys can see the YouTube video where I'd marked that there was whether the Dow Jones will be third time lucky, where the two historical head and shoulder patterns which are bearish in nature actually result into a bullish breakout. Now, if you can see over here that this was a bearish head and shoulder pattern, fortunately, Dow Jones did not break this major support trend line. It just had a retest of this trend line, and we took a bounce from here, from this trend line, and we did not break that neckline of the bearish head and shoulder pattern. And in fact, it resulted into an uptrending rally. The same was this time around as well. We can see this bearish head and shoulder pattern which got formed. Some can argue that yes, maybe the right shoulder is extremely big and huge, which is not typical of how a bearish head and shoulder shapes up. But then nevertheless, I think patterns can keep on varying according to various time frames of an uptrend. So again, a similar formation of a bearish head and shoulder pattern. Dow Jones does not break this previous low or this trend line support, and then moves up higher. The third time, which was just I think the last few weeks back, there was again an expectation that maybe the Dow could probably hold on to this 27,500-ish level. But the moment we saw a break of this trend line, you can see the intensity of the correction. The intensity of the correction became a bit sharper on the Dow Jones. So which is why this trend line is very important. Now, why do I call this as a fulcrum point? Because if you can see, what has happened is the moment the index managed to break past about this head of the head and shoulder pattern, from being a resistance, the characteristic of the pattern got changed, and it now acted as a support trend line. So the moment the Dow crossed this particular level, which is this particular resistance line, you can see that there is a change in the behavior of the level, and from being a resistance earlier, it now acts as a support. So a test of the support gets passed, there is a retest, there is a third test of the support, and the support manages to hold on, and finally you see a continuation rally. You can see the point over here. This is again the same point. This is the fulcrum point which I'm talking about. Now, a first test successful, second test successful, third test unsuccessful, and which is why this point over here becomes an extremely important point. Now, generally, when you see a break of a bearish and shoulder pattern, you expect that the sell-off gets into a first leg of an extreme mode. There is a bounce back, there is a possible retest towards the neckline, and the second leg of the correction happens. So which is why I believe that looking at the structure of the US major particularly, I would sense that there could be some volatility which is lined up ahead over the next at least next 1 to 2 weeks, and provided if the Dow Jones doesn't break back about this neckline of bearish head and shoulder pattern. So you can't be too rigid with the neckline level. It could be at 27,500, give or take 50-100 points or thereabouts. So you have to keep that buffer in line, because at times what happens is because of the extreme set of volatility, certain set of levels they get breached on an intraday basis, and then on closing basis these levels they tend to get sustained. So that's going to be one important indicator to watch out for on the Dow Jones. The third and the most important portion. Now we've seen the last I think last 1.5 or 2 years some brilliant trend setting of the Dow Jones. 4 tests of bulls. Now this is classical in nature, completely classical in nature. Now look at the points A, B, C, and D. Now whenever we see this is indicator, which is more like an oscillator. It tends to oscillate between -100 to 100. and the extreme points, they generally come across between -50 to 50. But of course there are extremes of the extremes happen when the indicator comes to that +100 to -100 zone. Now if you can see, concentrate on the points A, B, C and D. Now the first test of the point A in an uptrending market, the Dow Jones manages to form a short-term bottom. There is a rally, there is a double test of the bottom. This was also formed as in bearish RS, bullish RSI divergence as well. So you can see the divergence on the indicator as well. There is a divergence over here, on the indicator, and finally Dow manages to pick up pace again. The second retest of the indicator, and you see that there's a time-wise correction. There is a time-wise correction where Dow spends almost 1 month in a sideways trading range after continuing the rally. The third test, which is the point C, you can see that there is a sharp touch towards the support trend line, and there is no and there is an immediate recovery post that. We call this as a V-shaped recovery. So there is no double test of the bottom, there is no sideways range, there is a V-shaped recovery which happens over here. Point number D, where the markets became extremely confident that, hey, first time we took a support, bullish RSI divergence, second time correction, third time V-shaped recovery, fourth stage or the fourth point is where the level eventually got tested and broken. And the moment we broke this major support trend line, you saw an extremely sharp correction coming by. Now, why I'm trying to indicate something over here, that we are now somewhat starting or testing the strength of the bulls in the last two attempts. So if you can see the point E and point F, point E, there was a test towards the support trend line over here. There's a bounce back which resulted into a decent and a strong uptrend for Dow Jones. There is a second point over here which is point F. So we generally and typically see change of behavior happening at each points. Difficult to anticipate what behavior can point E and F have, whether it's a similar behavior or completely contrast. But here it was a completely strong uptrend which ensued. Here we could probably expect that, given the bearish and shoulder pattern and the other slopes which I mentioned of the trend line, there could be a possible retest of the previous support. So the point F, or the characteristics of this indicator on the point F, could be very, very important to watch out for. So which is why the next 1 week could be extremely crucial for the fate of the US major. And if a retest of this brown support trend line happens, if it gets successful, then we can attribute that the trend would continue for the indices, and possible retest of the new high as well could be in line. But if the test fails, then you could be in for some mean reversion on the global index major. What does this have an effect on our market? So what are the observations? So I've just plotted the same indicator, which I call it as the MRI, the mean reversion indicator, which is a fantastic indicator which works beautifully well on understanding what are the exact points of mean reversion, and when mean reversion happens, where is it that the markets will generally come back to as a mean reversion, as a completion of the mean reversion point. Now we can see that the indicator tops out over here. There is a price rally which happens consecutively, but the indicator keeps on making a pattern of lower highs and lower tops. This is what we call as a classical sign of a bearish divergence, where the indicator drops down, forms a goes into a deceleration mode. It forms a pattern of lower highs and lower lows, but the prices keep on making a pattern of higher highs and higher lows. Now all of a sudden there is a knee-jerk reaction in the prices, as you can see over here, and the price is correct. So you can see the prices ended the mean reversion, or rather ended the correction at exactly the mean reversion point. This was the mean reversion point. Now till the time the indicator was making a pattern of lower highs and lower lows, till the time the prices did not correct and come back to this level, the mean reversion was not completed. The moment mean reversion is completed, that's where the markets took support yet again. This was just recently, I think 9-10 months back, Jan 2020 or start of Jan 2020. Let's look at some other time frame. This was, I think almost 6-8 months prior to that. Again, the indicator forming a pattern of lower highs and lower lows. As you can see, the price is making a pattern of higher highs and higher lows. And all of a sudden, when the indicator breaks a certain key support, is where you see the prices reversion, or prices reverting to the mean. You can see the starting point over here. This is the starting point of the mean reversion, which means that eventually the prices can keep on going up higher and higher, but the moment the correction shapes up, the correction has to land the prices back towards this mean reversion trend line. That's where the correction generally ends. That's where the mean reversion generally ends. Now, why are we discussing this today? This is the charts for Nifty, and this is over the last 3 to 4 months. Now, if you remember, the June and the July high, which I'm discussing about on Dow Jones, is also coinciding with the fulcrum points on the Dow Jones, or the ranges on the Dow, or the patterns on the Dow as well. So which is why this becomes an important observation. If you can see on the prices, Nifty has formed a pattern of higher highs and higher lows since that. But the indicator, surprisingly, which I call it as the MRI indicator, the mean reversion indicator, it's a fantastic indicator. If you guys want more info, you just guys have to share or add your comment on it, and I can provide you some beautiful insights about the indicator. So as you can see over here, the indicator forms a pattern of lower highs and lower lows, and we've started the process finally of a mean reversion on the prices. Now, according to this indicator, I'm talking about, according to this indicator, typically a mean reversion ends when the starting point of the indicator, or the starting point of the mean reversion of the indicator generally gets completed. Now, this is typically signaling that the mean reversion could end at 10,300 to 10,500-ish level on the Nifty. We are at 11,000 levels. Friday we saw a fantastic bounce on the markets. Everyone is now gung-ho and expecting bullish, but I would say that stay a slight bit cautious, because if this mean reversion play actually has to play out the way we've seen historically, then there could be slight bit of more turbulence which is lined ahead. So this brings us to the conclusion of what are the pointers and strategy for the coming week. We believe that the next 1 week is going to be an extremely high probability of volatility, which is likely to make a comeback again for the global markets, and especially for our markets as well. So the next 1 to 2 weeks are extremely crucial. There is a possibility. So as you can see on the variety of charts in the time frames which I've discussed, various indicators which I've discussed, there could be a possible retest of the previous low, and the possible retest of the previous low is some very important trigger to really watch out for. The MRI, which I call it as the mean reversion indicator, level is at 10,300 to 500 zone. So that's what you need to watch out for in terms of Nifty, or the zone of support. So for someone who's wanting to look out for mean reversion points or mean reversion zone, or the major support zone for the index, once we've broken that 11,000 support, I think this is the most important next leg of support on the index. The third and the most important point which we need to look out for is the behavior of the market internals, whether there is continuation of a shift or a tilt towards defensives. We've seen IT stocks doing pretty well. We've seen pharma stocks rallying. Few FMCG stocks are also trying to move up higher. So we've seen this September month, there is a clear shift and bend or a tilt towards defensive. So we need to see whether this pattern continues or not, because if this pattern continues, then the markets are signaling that there is likely a continuation of the volatility, and the markets would want to shield their portfolios by moving into the defensives. So the strategy is very, very simple. It's easy to now frame the strategy once you've understood the context of the view. Don't get carried away with this 1 day bounce. You might have probably a couple of days of more bounce which could be lined ahead in the global markets as well as in our markets. But then the mean reversion indicator is something which still gives you an inclination or an inkling that there could be more volatility which could be lined ahead. The index still needs a lot of confirmation points to probably adhere to restart an uptrend. So whenever you start an uptrend, there is always a leader sector. Now, either whether it's Reliance which participates, either it's the auto stocks which tries to kickstart, the cement stocks, something, or the banking index which continues to move up higher. So we need to see those visible signs where the markets are confirming that there is a trend or a larger trend which is emerging into the internals as well. So watch out for those follow through price action. 1 day up, second day down doesn't really justify or give confidence to traders. So watch out for those kind of behavior and the tilt towards market. And last and foremost is, of course, in these kind of volatile times, it's always better that you hedge your portfolio or your position, and that's the best way to try and sail through these times. So I hope, guys, you would really like this video. This is what I want to do on a continuation basis for the next for a weekly basis. And I hope that I'll receive an active participation from all of you guys. If there are any additions which you guys want me to include in this strategy or brief overview on the markets, we can keep on discussing this and keep on improving and adding as many points as possible. So then the view becomes absolutely clear, crystal clear on the market. So these interesting observations are something which I would ensure that I will probably try and be more consistent with in throwing and showcasing it to you guys as well. But again, thank you so much, guys, for all your patience and hearing the video, seeing the observations on the US major as well as on the Nifty. Don't forget to like, comment on the video, as well as share the video. I think your positive vibes will of course helps us to try and perform very well consistently over the future. So I think I'll probably end up with that note, and just ensure that you be slight bit of cautious or slight bit on the cautious side, because I expect that this volatility would probably reshape again over the next 1 to 2 weeks. So on that note, thank you so much, guys, for all your support. Don't forget to like, comment, and subscribe to the channel as well. Thank you.